2 billion tokens. That is the exact amount of new supply hitting the market every single day. If you are holding Verasity right now, you need to understand that your equity is being diluted by over 1% daily to reach a new maximum supply of 200 billion. This is not a correction. This is not a buy the dip opportunity. We are witnessing a fundamental shift in the project's economic reality that invalidates almost every bullish thesis we have discussed in the past 3 years. The chart has broken a 4-year structure, the business model has officially pivoted, and the math suggests the exit door is closing fast. Welcome back to Crypto Yield Pro. Today, we are not doing a market update. We are doing a post-mortem on a position that, frankly, has turned into dust. If you look at the price action over the last 2 weeks, you'll see that we're sitting around a lot of zeros on price. And I don't even know how to say this. We have completely lost the psychological support levels that held up the price throughout the bear market of 2022 and 2023. Sentiment has shifted from frustration to outright hostility. You can feel it in the forums, you can see it on X, and most importantly, you can see it in the order books. The reason this video matters right now is not to give you false hope. My job is not to tell you what you want to hear. My job is to protect capital. And right now, the data is screaming that capital preservation is the only game left to play here. We need to talk about why the floor fell out, and more importantly, how I'm managing what is left of this trade. Let's review the fundamentals, because the situation has changed drastically since our last update on December 30th. The first major red flag comes from the supply side. On January 14th, we saw data confirming that the team is minting 2 billion VRA tokens daily. The target? A new maximum supply of 200 billion. Now compare that to the current circulating supply of around 170 billion. The market is being asked to absorb 30 billion new tokens in a matter of weeks. Simple supply and demand mechanics tell you that unless demand spikes by 20% overnight, price has to drop to compensate. And there is no demand spike. Why? Because the narrative has been killed. Look at the official communications coming out of the project. We have a clear statement from the team saying, quote, "The traditional InfoFi model is dead. They are pivoting. They are moving towards something called PLRL, which they describe as an internet equity layer." Now, pivots happen in crypto, but usually the legacy token captures value from the pivot. Here, the communication suggests the opposite. They explicitly stated that they have discontinued plans for a Tron-based stable-like economy because it would provide, quote, "no meaningful utility or trading upside for retail participants." That's a direct admission. They are telling you, in plain English, that the retail utility for VRA is gone. And for those hoping the new PLRL token will save them, let's look at the valuation models floating around. One analysis that caught my eye breaks down the math. If PLRL launches with a fully diluted valuation of $1 million, which is a realistic target for a new low-hype asset, and they airdrop 20% to VRA holders, the math works out to roughly many zeros, 1 of value per VRA token held. That is negligible. It does not even cover the transaction fees to claim it. Add to this the rumors regarding the smart contract. There is code circulating that shows an interface allowing for what some developers are calling indefinite minting. Whether this is a misunderstood governance feature or a true exploit almost doesn't matter anymore. In this market, trust is the currency. When trust evaporates, liquidity follows. The community reaction, calling the project dead before it's born, confirms that the social layer, the people who actually buy the token, has capitulated.
Now, I want to pull up the 2-week chart because the technicals are confirming everything we just discussed fundamentally.
If you remember my analysis from the last video, we were tracking a very clean descending channel. For years, this channel respected the laws of market structure. We had defined highs and defined lows. That structure is now broken. This week, we saw a decisive candle close below the lower trend line of that channel. In technical analysis, once a multi-year support structure breaks, the asset enters what we call price discovery to the downside. There is no historical support here. We are in freefall. Let's look at the Fibonacci levels. I have anchored my Fib tool from the lows of 2023 and 2024 up to the highs of 2024. We have smashed right through the 2618 extension level. The next logical magnetic point for price is the 3618 extension. That's significantly lower than where we are today. We are talking about another 80% downside risk from current levels. Look at the moving averages. The price is currently trading below the 10, 21, 55, and 100 exponential moving averages on the 2-week time frame. These lines are no longer support. They are now heavy dynamic resistance. Every time price attempts to rally, it is going to slam into these averages and likely get rejected. I also want to point out the Heikin-Ashi RSI at the bottom of the chart. Yes, it's in extreme oversold territory. Normally, a contrarian investor might look at that and say, it is time to buy. But you have to understand context. In a terminal crash, oscillators can stay oversold for months. Relying on an RSI signal while the fundamental business model is being dismantled is how you catch a falling knife. So, what do we do with this information? If you watched my video on December 30th, you know I was already skeptical. I mentioned back then that if we lost the channel support, my bias would flip to short. And that is exactly what I did. When that channel broke, I opened a short position on KuCoin, which, by the way, was one of the few places I could even find enough liquidity to short this asset. I used low leverage, just 2x, targeting the 2618 fib region. I closed that trade for a 25% profit. It wasn't a life-changing trade, but it recovered about 1/5 of the paper losses on my spot bag. I did not signal this to my Telegram group because the volatility was too dangerous, and I didn't want anyone getting liquidated on a wick. Now, regarding the spot bag I still hold. Let's be real, it's basically dust at this point, but I do have a plan. I have marked a green dotted line on my chart. This represents a backtest of the breakdown level. It is common for broken support to be tested as new resistance. If, by some miracle of volatility, we get a pump back up to that green dotted line, I am selling 75% of my remaining position. No questions asked. I'm taking whatever liquidity is available and walking away. The remaining 25%? I'll leave it. This is the moonbag scenario. I have 2 other green circles marked much higher on the chart, one at the middle of the channel and one at the upper resistance. Do I think we get there? Probability says no. Probability says we are going to 0. Yes, more zeros. But in crypto, strange things happen, and since the position size is now negligible, the opportunity cost of holding that last fraction is low. However, do not mistake this for conviction. This is not me hodling. This is me managing a failed trade. The invalidation for this bearish thesis would require a weekly close back inside the channel, back above the moving averages, and a complete reversal of the dilution schedule. We are nowhere near that. The data is pointing in one direction. We have a project that has abandoned its original roadmap, a token supply that is inflating hyper-rapidly, and a technical chart that has broken its 4-year floor. If you are looking for a bottom, be very, very careful. The market is pricing in a total collapse of the legacy VRA token in favor of the new ecosystem, and the math suggests the legacy token holders are not being carried over to the promised land. My strategy is defense. I'm not adding fresh capital. I'm looking for exit liquidity on any bounces. If you want to track this setup day by day or see if that green dotted line actually hits, come join my free Telegram group. The link is in the pinned comment below. I post my charts and macro insights there every single day. And if you want to understand the full context of how we got here, go watch my previous video on Verasity from December 30th. It explains the warning signs we saw before the crash. Remember, protect your capital and respect the data. My videos are never financial advice. See you tomorrow in the next one.